Now, this is the first chapter, basic concepts of GST. In this basic concepts of GST, these are all the things that we are going to cover. What is GST, how GST formed, etc. So, this page we will come back later after completing this information. First we will see what is GST. Full form don't tell. GST full form everyone knows. Goods and services tax. But what is it? It is a value added tax. Why is it called value added tax? You know, whenever I am purchasing for 100 rupees, I am selling for 150 rupees. Now on that 50 rupees only effectively I will be paying indirect tax, that is GST. Is it clear? So that's the reason why it is called as value added tax. How, sir? How that works? How much is the price at which I am selling? 150. And on that 150, let's take 10% as the GST. For example, just for computation sake, 150 into 10%. 15 rupees is the GST on my sales. I am purchasing. At what price I am purchasing? 100 rupees I am purchasing. 100 into 10% is what? 10 rupees. So 15 rupees minus 10 rupees. Why 10 rupees I need to reduce? Because there is a system called as input tax credit, that is tax paid on purchase I will set off against the tax payable on sales. Is that clear? So that's why GST is a value added tax. Okay, you can see there. GST is a value added tax. GST is a value added tax. Levied on what? Levied on supply. Supply is the taxable event under GST. So supply means what? This is a chapter which we are going to learn next. The next chapter is supply, but supply is the taxable event. Taxable event means what? Indirect tax is a event based taxation. Event based taxation means there is a event. On happening of that event, we need to pay tax, that is known as taxable event. Example, even income tax also is like a event based only. If you see, if you don't have a capital asset, transfer of capital asset, capital gain will not come. If you don't have business or profession or profit or gain arising out of business or profession, there won't be PGBP, correct? If you don't have a house property and if you are not giving it on rent, if you have a house property but not giving it on rent, then income tax will not come. Am I right? So like that, taxation is a event based. So one event will happen. On happening of that event, we will be required to pay tax, that is called as event based tax or taxable event. Is it clear? Now, even indirect tax is also like that only. And in the past we had lot of indirect taxes like excise duty, service tax, sales tax, etc. and all those are also the same. So when an event will happen, then that particular tax will get attracted. Got it? Like that, supply is the taxable event under GST. So supply is what? Taxable event under GST. Taxable event under GST. Supply is taxable event under GST. And so manufacture, sale of goods or services, all this will come under supply, which we will be seeing later. And what is the difference between direct tax and indirect tax? You all will be knowing it, so which I don't want to tell now because it's fundamental. What is the difference? Direct tax, who will have the burden? The one who is paying. Indirect tax, who will have the burden? Not the one who is paying. In turn, it will be transferred to the next person. So who will have the indirect tax burden always? Ultimate consumer. The ultimate consumer will have the indirect tax burden. Am I right? And it is like, if you slap a person, if he feels the pain, that is direct tax. If you slap a person, he in turn slap the next person, like that, like that, like that. It keeps on going. That is indirect tax. Is it clear or not? Ultimately, who will have the burden? The consumer. The consumer of that goods or services will have the burden. Is it clear? And in case of indirect tax, so we have many indirect taxes in the past we had. Now the major indirect tax is GST and customs. These are the two indirect taxes that we have at present, which is major. Is it clear? Now, how GST is formed? You need to know this. So, first we need to understand what is GST. We understood it's a value added tax and it is payable on supply. What is supply? It is a taxable event, but we have not yet discussed as to what is the meaning of that supply. Got it? Taxable event means we learn event on happening of which we need to pay tax, that is known as taxable event. How GST is formed? In the past year, we had many indirect taxes levied by central government. GST is not a new tax. So, all indirect taxes we will put into one mixie, grind it and we get a mixed fruit juice, correct or not? Like that, GST is a mixed fruit juice, okay. Lot of old indirect taxes and all, they have merged and they have made. So, this is not something new, okay. So, this was already there, but only thing it was in different names and now they are just giving it one name by grouping all the taxes. What are those indirect taxes which were levied in the past? Central government used to levy 4 indirect taxes in the past: central excise duty, service tax, central sales tax and customs duty. These are the 4 indirect taxes levied by central government in the past. What were they? Central excise duty, service tax, central sales tax and customs duty, okay. So, see this. So, first we had central excise duty. ED means excise duty. On what? No need to write, just listen. On what we need to pay? On manufacture. Whenever you were manufacturing, you are required to pay central excise duty. Then service tax. Service tax whenever there is a service which is provided by one person to another person. So, on that service tax used to be there. Then on import or export there used to be customs duty. On import or export there used to be customs duty on import or export. And all these are levied by whom? All these are levied by central government levy. Levy means what? Imposing. Imposing tax is known as levy. So, central government levy and one more, that is central sales tax. Central sales tax on what? Interstate sale. Interstate sale. Interstate sale means what? Sale happened from one state to another state. That is known as interstate sale. These were the 4 indirect taxes which were levied by central government in the past. In that, whenever manufacture happens, central excise duty, whenever service happens, service tax, and whenever interstate sale, one state to another state, central sales tax. But central sales tax has got a speciality here. Even though central sales tax is levied by central government, but it was collected and retained by state government, okay. Who used to collect it and retain it? State government, okay. So, even though it is coming under central government levy, but collected by state government, okay. Now, if you observe this, except customs duty. So, customs duty alone they have not subsumed. Except customs duty, remaining 3 got subsumed into GST. You understood? So, all indirect taxes except, come on, except customs duty got subsumed into GST. You can see that here. So, all indirect taxes, first point is that all indirect taxes levied in the past by central government. What were the indirect taxes levied in the past by central government? Central excise duty, service tax and central sales tax got subsumed into GST. And whether customs duty is subsumed into GST? No, that is this. Customs duty not got subsumed into GST. Customs duty is outside the ambit of GST. Only central excise duty, service tax and central sales tax. Customs duty not subsumed into GST. That is the second point you can see. Customs duty is outside the ambit of GST. However, there used to be additional customs duties. These additional customs duties were levied to counter the effect of excise duty and sales tax on like article if imported into India. Example, let's take a comparison. I am a person who is importing a smartphone. You are locally purchasing the smartphone. When I am importing the smartphone, what are the burdens that I have? Only customs duty. Okay. So just now I told you what are the various indirect taxes we had, these four. So whenever I am importing, I have only customs duty burden. When you are locally purchasing, what burden you will be having? As you are locally purchasing, means someone should manufacture it, correct? Means they will collect excise duty from you, that burden is on you. Then they will be selling the product to you, then they need to pay sales tax, that burden is on you. And to make the smartphone, they need to import the raw material, that raw material ka customs duty is also on you. Are you understanding this? So who will be having more burden? So a person who is importing or the person who is locally purchasing in India, who will be having more burden? Locally purchasing, because you have to pay multiple taxes. I have to pay only one. So naturally what will happen? The import will increase. How to curtail import? Two options. Option number one. Let's put even on importer also additional taxes. Is it clear? Let's put on importer also additional taxes so that imports will be discouraged and local purchase will be encouraged. Is imports good for the economy? Why? What will happen if too much of imports happens? There will be foreign exchange outflow. When there is a foreign exchange outflow, automatically our rupee will depreciate. Already rupee is depreciating, but it will depreciate further, and surprisingly it may go to an extent where $1 will become 100, $1 will become 120, 150 in the very near future. So that's why always government will try to control the import. So what are the two options? Option number one, on importer also let's put additional burden. Option number two, second option, on local purchases. On local purchase, you are purchasing locally, na? We will eliminate multiple taxes and we will keep only one. Is it clear? Now you tell me as a finance minister which one you will choose. Option one, on importer let's put more burden of taxes. Option number two, on local purchaser let's eliminate the multiple taxes and keep only one tax. Which option is best? As a finance minister, how many of you agree with first option? Very good. You have a very good future as a finance minister of India. Okay. Rest of all are thinking about people. You should not think about people. Okay. Why are you thinking about people? You should not think about people. We should think about money. You understood? People, all these things. No, you are in a different. Maybe, because you are from Tamil Nadu, you are like this. Okay. So, but, you should not be like that. You should be different. What is that? Money. Money is priority. What is priority? Money is priority. Like that only finance minister will think. So, therefore, option one they went for. What is that? On importer they added additional burden. What is that additional burden? Importer should pay additional customs duties. Locally he is paying, na? Locally he is paying customs duty on raw material. You pay customs duty on finished goods. Locally he pay excise duty. Where are you paying? I am not paying, sir. Okay, pay. And excise duty cannot be levied, sir, because it is manufactured, not manufactured in India. Only if manufactured in India, excise duty can be levied. It cannot be levied, sir. Okay, we will create duplicate. Countervailing duty. You understood? We will create we can do. If you want, you stay. Otherwise, go out. Anti-Indian. Go out. You understood? So therefore, if you want, you pay. Otherwise, no, don't do anything. Don't import. If you are importing, pay it. We create. What is it? We create CVD. What is the full form of CVD? Countervailing duty. To counterbalance excise duty. Then there is something called as SAD. SAD. To make the importer sad. special additional duty. This special additional duty is to counterbalance sales tax, because you are also paying sales tax now when you locally buy. So importer also should pay that. That's how they created two additional customs duties. What are the two additional customs duties? Countervailing duty and special additional duty. To counterbalance what? Excise duty and sales tax. Whether excise duty is subsumed into GST? Just now you read the first point. Whether excise duty merged into GST? Yes. So CVD is also a part of excise, like a excise only, duplicate, correct? Excise duty got subsumed, so CVD also got subsumed. And whether sales tax got subsumed into GST? Yes. So therefore SAD also got subsumed into GST. That's the reason why on import we need to pay GST also. Is it clear? Not only customs duty, but we need to pay GST also. Why we need to pay GST also? Because in the past on import there used to be CVD and SAD that got subsumed into GST. So at present GST is also applicable on import. Is it clear? So see this. However, additional customs duties. What are the additional customs duties? Countervailing duty to counterbalance what? Excise duty. And special additional duty to counterbalance what? Sales tax is subsumed into GST. Understood or not? Then specified indirect taxes levied by state government. So far what we have discussed, all these are about central government levies. Now state government. State government also can levy indirect taxes. Yes. In the past they used to levy lot of indirect taxes. And not all indirect taxes levied by state government got subsumed into GST. Only few indirect taxes levied by state government got subsumed. What are they? Look into that. What are they? Number one, value added tax. When value added tax? Whenever it is interstate sale, it was CST, central sales tax. Interstate. Interstate means one state to another state. Intra-state means within the state. Within the state also sales can happen na. In that case, tax is levied by state government, that is value added tax. Then advertisement tax. Advertisement tax is on hoardings. So big hoardings and all they used to keep na. For that they need to pay advertisement tax. Then luxury tax on hotel accommodation they used to pay. 3-star hotel, 4-star hotel, 5-star hotel, like that. Then entertainment tax on actors. All actors, movie actors, serial actors, cinema theaters, and then cable TV operators, DTH providers, they used to pay entertainment tax. All these were present or past? Past. Even lottery betting tax. Lottery betting on, so lottery, sale of lottery tickets. Is lottery prevailing in India? Yes. Where is it prevailing? Everywhere in India? No. Only few states it is prevailing. Example, Kerala, Assam. These are some states where lottery system is prevailing even today. And betting. Yes, we have lot of betting na. Betting transactions were there even before, now also it is there. But sir, it is illegal na sir betting. See, in tax we will not bother about legal or illegal. Whether you are earning legally or illegally, first pay tax. If it is illegal, we will think about it later. You understood? Some other law will come into picture. Even if it is illegal, you have to pay tax. Is it clear? Sir, cricket betting is legal or illegal? Illegal, except Dream 11. You understood? Dream 11 alone is legal, but remaining and all illegal. Then, so betting in this cards, rummy games, yes, etc. So card games people will play na, legal or illegal? Illegal, but online rummy will be legal. You understood or not? So therefore, these online betting platforms are legal. Same thing if conducted offline, it is illegal. But legal or illegal, you need to pay GST. Is it clear or not? It is like you win or you lose. But government will always win. You got it? In betting, not everyone will be winning. Some people will win, some people will lose. But whether you are winning or losing, government will always win. You know what is the GST rate on winnings and bettings? 28%. 28% is the rate of GST. 30% is your income tax. Okay, horse racing, betting, etc. That is your income tax. GST I am talking. Sir, both are payable. Yes, that's the beauty. both you need to pay. Income tax also you need to pay, GST also you need to pay. And that's where close to what? Income tax 30. On the top of that, health and education cess, correct? And 4%. Then suppose if the slab of the person is in a higher slab, then surcharge also will come. You got it? Then this side GST is also payable. Sir, then close to 60 to 65% he will pay as tax itself, sir. Yes, that's the reason why people will not do legalized betting. They do illegalized betting. You understood or not? So that I know they will get some money. But once they are caught, they need to pay. GST is applicable. Because previously it was in the form of lottery and betting tax, now they subsumed into GST. Purchase tax, that is octroi. Somewhere in final accounts when you are doing, you might have come across this octroi, like that one word, carriage inwards, octroi, etc. So that is whenever you are in Tamil Nadu and you are purchasing from, say, another state. When you are purchasing from another state, why are you purchasing from another state? You can buy in local itself. Now why are you buying from other state? No, sir. Maybe cost is less, or maybe quality is good, etc. and all. Okay, fine. Then you buy and you pay to Tamil Nadu government some tax called as purchase tax. Is it clear? Tax on sales is sales tax. Tax on purchase. Previously we had, sir, yes, we had. All these were past. What is the effective date of implementation of GST? 1/7/2017. With effect from 1/7/2017, this got subsumed into GST. So only 6 here, you need to remember. 6 indirect taxes levied by state government in the past. What are those? Value added tax. Entertainment tax. You remember easily, value added tax. Okay. Then entertainment tax. First entertainment. For entertainment, what is required? Advertisement is required. Correct? So advertisement tax. You understood? Then this is luxuria or necessitya? Luxury. So luxury tax. You got it? Value added tax, entertainment tax, advertisement tax, luxury tax. Got it? And thereafter betting, lottery and betting tax. One more, that is purchase tax. Is it clear? These 6 are only the indirect tax levied by state government in the past that got subsumed into GST. Apart from that, other indirect taxes levied by state government not subsumed into GST. Can you give me an example for that? State government, darling. Customs duty is levied by central government. I am talking about state government levying indirect tax. Even today it is there but not subsumed into GST. Municipal tax. Very good. Municipal tax, property tax, etc. not subsumed into GST. Even stamp duty also not subsumed into GST. On properties we pay stamp duty, not subsumed into GST. Road tax we pay. So that is also not subsumed into GST. Next, professional tax, have you heard of? So that professional tax also not subsumed into GST. These are some examples. In MCQ what they will do, which of the following not subsumed into GST, like that they will give one option. Okay, in that one option, so will be like which is not subsumed, which is not subsumed. That's why you should know what are not subsumed also. You can see below. Indirect taxes not subsumed in GST, state excise duty. So on liquor, etc., state excise duty is payable, not subsumed, but only central excise duty is subsumed. This is which excise duty? This is central excise duty. First one is central excise duty, CG, central excise duty. Got it? Central excise duty is subsumed into GST. Yes, central excise duty is subsumed into GST, but state excise duty not subsumed into GST. Understood? Next, what about professional tax? Not subsumed. Local body tax, stamp duty, these are all some things which are not subsumed into GST. Understood? And even there is a big list also, but all these things are not required. But for information I am telling you, in Maharashtra there used to be something called as local body tax. That local body tax also not subsumed into GST. In Kerala there is something called as Kerala flood cess. Kerala flood cess. This Kerala flood cess is levied because of lot of natural calamities that happened in Kerala, floods, then landslide, etc. For that reason, they have levied Kerala flood cess. That is also not subsumed in GST. And in Karnataka, there is something called as mandi tax. Okay, not not that mandi, okay. So you eat na mandi, not that. This is different. Mandi means wholesalers. Wholesalers, will be called as mandis, okay. So mandi tax, that they used to pay. All these are also others. So in question, when you don't know anything, that is actually not subsumed into GST. Is it clear or not? Because what you learn is what is subsumed into GST. Something new comes, not subsumed into GST. So that is the answer for that, which are all not subsumed into GST. Is it clear? Next, what about indirect taxes levied by local authorities, whether that got subsumed into GST? No. Indirect taxes levied by local authorities not got subsumed into GST. That's where even today, when you go to cinema theaters, you will be seeing entertainment tax. But this entertainment tax is not levied by, central government or state government, but it is levied by local authority. If you observe, entertainment tax is already subsumed into GST in point number 4, correct? But this is which entertainment tax? Levied by state government. But entertainment tax and another indirect taxes levied by local authority not subsumed into GST. Understood? Next, so far we have seen how GST is formed and whether we have single tax model or dual tax model. Income tax is single tax model or dual tax model? Income tax, single tax. Means who will collect income tax? Central government. And thereafter they will be giving it to state government during budget allocations. Got it? But GST, single or dual? Dual. Dual means what? Central government also will collect, state government also will collect. That is called as dual GST model. Why there is a need of dual GST model? To protect fiscal federalism. Fiscal federalism means, that is, generally what happens, state government also will have certain roles and responsibilities. Central government also will have some roles and responsibilities. Now, both if they need to perform, for example, laying down the road, laying down the highway is a job of the central government. But laying down normal roads, street roads, etc. and all is a role of state government. Means they also need money, na? For the sake of that, they need revenue. For that reason only we have dual GST model. This is called as fiscal federalism. Is it clear? And to protect that fiscal federalism, both central government also will levy GST, state government also will levy GST. For example, when you are going to a restaurant and you eat food for 500 rupees, 2.5% you will pay CGST and 2.5% you will pay SGST. So what is the logic in that? Same. Central government also levying, state government also levying. This dual GST model, is it only in India or even it is there in other countries? It's there in other countries. What are the other countries where this dual GST model is prevailing? Brazil and Canada. Brazil and Canada. India has adopted dual GST model through Constitution 101st Amendment Act 2016. This is again very important. So why there is a need of Constitution amendment? Because see, just now I told you, so far indirect taxes was levied by central government separately, state government separately. Now everything is brought into GST. Means GST will be levied both by central government and both by state government, which means there is an amendment that is required in Constitution. What is the year in which Constitution amendment happened? 2015, 2016, 2017. 16. What will happen? We will think effective date of implementation is 2017. So which means 2017 is the Constitution amendment. No. 2016. 2016 is the Constitution amendment, it's not 2017. 2017 is the GST law that came. Amendment happened, Constitution amendment happened in 2016, GST law came in 2017. And India adopted GST law from where? Brazil and Canada, okay, where both central government and state government has power to levy tax on the common tax base, that is value. Now, as India follows dual GST model, means who will levy? Who will levy GST? Only central government or both CG and SG? Very good, both CG and SG. Then who should take decisions? Both CG and SG should take decision, correct or not? And how to take the decisions independently? They cannot take collectively, they need to take the decision. For that reason, they created one council called as GST Council. Is GST Council a constitutional authority or a government body? It's a constitutional authority. What's the difference, sir? If it is a government body, when the government dissolves, this government body also will get dissolved. Every 5 years government dissolves or not? During elections the government will dissolve, again the new set of elections and the new set of MLAs will come. So which means that government dissolves for every 5 years. If it is a government body, it will also dissolve for every 5 years. But GST body should not dissolve. That's the reason why they make it as a constitutional authority. It will never get dissolved. It will keep on continuing. And who will be the members of GST Council? Definitely not Prime Minister, definitely not Chief Minister, but Union Finance Minister, okay, Nirmala Madam. So she will be for many 15 years, whatever, last all these years, she was only the Finance Minister, and it may happen like in future, the Finance Minister position may change to Nirmala Minister like that. So could happen, okay. So Finance Minister, Union Finance Minister is the chairman, member. Next, who else will be there? Every state also will have a finance minister. That finance minister also will be part of GST Council. And how many states do we have? 28, 29. 28 or 29? 28. Jammu and Kashmir became union territory, so 28 states. Apart from these 28 states, there are 3 union territories with state legislature treated like state. They will operate like a state, but literally they are called as union territory, but they will operate like a state. Means elections will happen, assembly is there, chief ministry is there, etc. What are those 3 union territories? Pondicherry, super. Next, Delhi, good. Then Jammu and Kashmir. Chandigarh and all will not come. Goa, first of all, is not a union territory. Got it? So Pondicherry, after Pondicherry, Goa, no. Wherever place which you like to go, don't tell. So Pondicherry and thereafter, Delhi and Jammu and Kashmir. Actually, Delhi and Jammu and Kashmir, recently only elections also have happened, okay. So these are 3 union territories with state legislature. Means what? It will operate like a state. So for that also there will be state finance ministers. So total, how many state representations will be there? 31. How 31? 28 plus 3, 31 plus union finance minister, 32. And remaining 5 union territories. What are the remaining 5 union territories without state legislature? All these 5 are under the control of central government only. What are they? Telangana, when it became union territory? Daman, Diu, Dadra, Nagar Haveli. That is one union territory. Daman, Diu, Dadra, Nagar Haveli. Next, remaining 4. Chandigarh, like that one person said. Chandigarh is also union territory without state legislature. Next, Andaman and Nicobar, that side. Lakshadweep, okay. Next, one more, Ladakh. The Jammu and Kashmir, they divided into 2 union territories. One is union territory with state legislature. Another is union territory without state legislature, that is Ladakh. There are 5 union territories without state legislature. What is that? Daman, Diu, Dadra, Nagar Haveli, Chandigarh, Andaman, then Nicobar, Lakshadweep and Ladakh. Okay. These union territories, 5 union territories, needed one representative. That's where there is one union FM plus union minister who is appointed as state affairs. So that union MP who is in charge of revenue is also one of the members. So total how many members? 33 members. Okay, you can see that. Article 279A of the Constitution, constituted by President of India and Union Finance Minister is its chairman. It is a decision making body of GST. So what it will do, it will take the decisions related to GST, and moreover it's a constitutional body. You need to remember this article 279A of the Constitution, that gives the powers for GST Council. And who will be the chairman? Union Finance Minister is its chairman. It is constituted by President of India. And total how many members will be there? 33 members. What is the quorum? Quorum is 50%. Quorum means what? Minimum number that should be present in order to call the meeting as a valid meeting. That is called as quorum. And what is the quorum? 50% is the quorum, which means out of 33, 50% is what? 16.5. That is 17 members should be present, then only it will be called as a valid meeting. And in this meeting, so today actually what happens is that many state governments are telling we can't do anything. So Union Finance Minister is only telling, so we are listening like that, state government will tell. Union Finance Minister will tell, no, what can I do? All the states only telling, so I am following that. You understood? They are actually playing a football match between us. You understood? So state government will tell it is central government will tell it is state government. Let's try to understand the reality. Reality you read and tell me. What is the weightage of vote of central government? Weight of vote of central government, how much? 1/3. What is the weight of vote of state government? Means who is having more weight? You understood? Then anything that happens, so definitely, we cannot blame only one government. Whom we should blame more? You understood? Because they are having the more weightage, 2/3 weights. So state government is having 2/3 weight and central government vote is only 1/3, which means weighted average you do na usually. So central government vote 1 plus 1, 2 votes, 2 into 1/3 plus state government vote. State government said 10 votes, 10 into 2/3. That's how the weighted votes will be counted. Is it clear? Next. How much majority is required to take any decision? Half, 50% majority or 75% majority? 75% majority. 3/4. 3/4 means what? That is 75%. It should be equal to 75% or greater than 75%? Greater than 75%. Greater than 75%. Means number of votes in favor should be greater than 75% of total. Is it clear? Then only the decision is taken. This is just like our Companies Act, special resolution. Am I right? So therefore 3/4 majority is required. Then only the decision will be valid, otherwise it will be invalid. And state finance ministers and MP of state affairs in charge of revenue or its members. So whenever you get a question, short note question on GST Council, you need to write these points, okay? And this is important for short note, possible. Already they have tested once. So write a short note on GST Council, this you need to write. Next, types of GST. What are the various types of GSTs that we have? So GST, even though they say it as one nation, one tax like that, but GST is not actually one tax. We have multiple types of GST. We have CGST, SGST, UTGST, IGST and compensation cess. CGST refers to full form, Central Goods and Services Tax. So from the name itself you tell me who will levy? Central government. And on which case? Intra-state sale. Intra-state sale. Now we need to understand what is intra-state supply and what is interstate supply. Okay. So carefully listen. It's already there, but I am just writing it here for you to get the clarity. That is, if location of supplier, there are two factors we need to understand. Location of supplier. Location of supplier. Location of supplier means where the supplier is registered or where they are doing business, that is called as a location of supplier. And place of supply. Place of supply. Place of supply will be determined depending upon each and every transaction. For some transactions, place of supply will be location of recipient. For some transaction, wherever the ending point of goods happens, some transactions wherever the service is actually performed, like that the place of supply differs for different transactions. We will be learning that later. So, but for that place of supply, once you determine if location of supplier and place of supply is in the same state or same union territory, if it is in the same state or same union territory, then it will be called as intra-state supply. Is it clear here? If location of supplier and place of supply is in the same state or same union territory, what is the nature of supply? Intra-state. Now you tell me what is interstate supply from this? If location of supplier and place of supply is in two different states or two different union territories or A state and a union territory. Very good. That will be interstate supply. Super. That itself is the definition. Really, that is the definition. Okay. So, if location of supplier and place of supply is in the same state or same union territory, it is intrastate supply. If it is same state, what is the GST that we have? We have CGST plus SGST if it is in the same state. If it is in the same union territory, CGST plus UTGST. Okay. If it is same union territory. So, from this, what are the three GSTs that we have? CGST, SGST, UTGST. CGST levied by, SGST levied by state government. Very good. Union territory GST levied by central government, not union territory. Union territory will not have a separate government because all union territories are under whose control? Central government control. So, CGST levied by central government, SGST by state government, UTGST is in turn levied by central government. So, both CGST and UTGST is levied by same government, sir. Then why there is a need of two separate GSTs? Just for accounting purpose, they need to know how much is the contribution made by the union territories. Everything is expenses only. Then why are we categorizing salaries, rent, taxes? Like that, why you will divide? You understood what I am telling? Everything is expenses. Actually, profit and loss account is simple. Income, expenditure, profit. You understood? Why, sir, we should break our head as to what expenditure, all these things? Because for administrative analysis, we need to know how much is salaries and how much is the rent, how much is other expenses, like that. We need to analyze. For that purpose, we divide. Like that, government also want to understand how much is the revenue from union territories, because central GST, CGST will be total, in total. So, but union territories they want to keep separately. That's why separate accounting head they created. That is this UTGST. Understood or not? Then next, if location of supply, this is what supply? So far what we have discussed, what supply? Intra-state supply. Intra-state supply. Then what is interstate supply? If location of supplier, and place of supply, if these two different states, two different union territories, a state and a union territory, then it will be called as what? Interstate supply. Interstate supply. And here, what is the type of GST that is applicable? IGST. What is the full form of IGST? Integrated Goods and Services Tax. Who will levy this IGST? Central government will levy. But sir, it defeated the dual GST model na, because in dual GST model, both central government and state government should levy, but here IGST only by central government means whether it defeats the purpose. No, not like that. IGST fully will not be retained by central government. They will be distributing 50%. What is always the share between central government and state government? 50-50. They are equal partners. Okay, 50% will be central government and 50% will be state government. So in IGST, what will happen? Full amount collected, 50% will go to, come on, central government. Remaining 50% will go to which state government? Listen. Location of supplier Tamil Nadu. Location of supplier Tamil Nadu. Place of supply say Kerala. So therefore, IGST, in that IGST 50% will go to central government. Remaining 50% will go to Kerala, not the originating state. Not the originating state, but the destination state. That's why GST is called as destination based consumption tax. Is it clear? So GST is called as what? Destination based consumption tax. See this, say this. First we need to understand. Next page you can see what is the meaning of intrastate supply and interstate supply. Whenever supply of goods or service or both happens, that is a taxable event under GST. Intra means location of supplier and place of supply in the same state or same union territory. Inter means two different states, two different union territories, a state and a union territory. And if it is intra-state, what is the type of GST? CGST and SGST. UT GST also applicable on intra-state, but it is by central government. Highlight this. It is by central government. Usually union territory GST, we will think that it is by union territory. No, it is by central government. IGST, integrated tax, it is levied and collected by central government only. By central government. This also you highlight as by central government. But fully central government will not retain. What they will do? 50% they will share. Next page you can see in the beginning. IGST is levied by central government and 50% of that is transferred to state based on what? Place of supply. If place of supply cannot be ascertained, why place of supply cannot be ascertained? There are certain transactions which are deemed as interstate supplies. Deemed interstate. Deemed interstate means what? Always IGST. Example, supply to SEZ. Concentrate. Supply to SEZ is a deemed interstate supply. Supply to special economic zone. And suppose if I am in Tamil Nadu, there is a special economic zone which is also in Tamil Nadu. Do we have SEZ in Tamil Nadu? Yes, very much yes. So around 3-4 SEZs are there in Tamil Nadu, if I am not wrong. Very near also we have an SEZ from Chennai. So there is a special economic zone. What is special economic zone? Simple. One area they will notify. In that area, central government will construct everything, and people who wanted to export, they can come and start their business in that area. Thereby, rent cost, electricity cost, etc. and all, central government will bear. So they have to incur only the variable cost in production. Thereby, they can export the goods at a cheaper rate. Today we are competing with whom in exports? Global market, with whom we are competing? China. We are competing with China. And China, the basic problem in China is that they can sell at a very cheaper rate. And we don't have the quality. In quality, we need to compete with Japan, US, Germany, etc. That is not possible. We don't have that much of quality for competition, because we in turn depends on those countries for the purpose of manufacture. So therefore we have to compete only in terms of price. We need to compete in terms of price. The product which is manufactured in India should be exported at a cheaper rate. Then only it will be possible. For that purpose, government will create a SEZ and will give them various infrastructure benefits and various incentives to them. Thereby they will encourage them to export. That area is known as special economic zone. Now you are in Tamil Nadu and recipient is also in Tamil Nadu, but where is that person in? SEZ. You are also in Tamil Nadu, the recipient is also in Tamil Nadu. It's actually intrastate supply, correct or not? But it should be treated as deemed interstate supply because the recipient is in SEZ. Is it clear? So again, when we discuss what are the transactions which are regarded as deemed interstate supplies, I will connect that point. So but supply to SEZ is a deemed interstate supply. So always what is the tax that is applicable? IGST is applicable. In that IGST, concentrate, place of supply is not ascertainable. Why not ascertainable? Actually place of supply is what? Tamil Nadu. But if you mention Tamil Nadu, it will become intrastate supply, correct or not? That's the reason why in filing return, in place of supply, we need to select it as other territory. So therefore place of supply is not ascertainable. Understood why place of supply is not ascertainable? Then in that case what will happen? IGST collected. That IGST collected, what they will do? See here, IGST is levied by central government and 50% is transferred to state based on place of supply. If place of supply cannot be ascertained, it shall be apportioned between the states based on turnover of the supplier during the financial year. Means what? Means what? For example, last year I am that supplier. I make supplies in Tamil Nadu. I make supplies in Tamil Nadu. I make supplies in Tamil Nadu. Okay. I made supplies in Tamil Nadu. 10 lakhs. But for which POS not available. POS not available. Understood? Now I have to see what are the other states for which I am making sale. say Karnataka, Andhra Pradesh and Kerala. For Karnataka, I am making sale of 20 lakhs, Andhra Pradesh 30 lakhs and Kerala 15 lakhs. Now what we need to do? Come on, tell me. First 50% out of this 10 lakhs IGST we pay na? Yaar, this is my sales here. This is my sales. 10 lakhs of sales, place of supply is not ascertainable. So what should I do? First, I will pay IGST. Am I right? Then what central government will do? Out of that IGST, 50% they will keep. Remaining 50% as place of supply not ascertainable. What they will do? They will distribute it between Karnataka, Andhra Pradesh and Kerala. In what ratio? 2:20, 30:15 ratio. You read it again, you will understand. That is, if place of supply cannot be ascertained, it shall be apportioned between the states based on what? Turnover of whom? Supplier during the financial year. So means ultimately the IGST will not go to fully central government. 50% will go to central government and remaining 50% will go to the state government. And that's the reason why I told you GST is called as destination based consumption tax. Is it clear? Then coming back to this, there is something called as GST compensation cess. What is it? GST compensation cess? Listen, same transaction if it happens in the past, that is, I am located in Tamil Nadu and my recipient is located in Karnataka. This is location of supplier Tamil Nadu, place of supply Karnataka. What is the nature of supply? Inter. Before 1/7/2017, what is the effective date of implementation of GST? 1/7/2017. Before 1/7/2017, what was the tax in this place? In this place, what was the tax? CST, Central Sales Tax. That Central Sales Tax was going to state government. Okay, that I told you now itself. CST, even though levied by central government, but collected by state government, correct or not? So therefore, this particular tax will go to state government in the past, that is before 1/7/2017, it will be going to state government. What was the tax? CST, collected by which government? Tamil Nadu, state government. Okay, which state? Originating state or destination state? Originating state. It was collected by originating state. But now what happened? With effect from 1/7/2017, same situation. What happened? IGST. Again I am repeating, concentrate. Before 1/7/2017, location of supplier Tamil Nadu, place of supply Karnataka and the nature of supply will be interstate, and CST was collected by the originating state Tamil Nadu. But with effect from 1/7/2017, what has happened? In the same scenario, IGST will be collected. Out of that IGST, 50% will go to central government, remaining 50% will go to state government. Which state government? Tamil Nadu or Karnataka? It will be going to Karnataka. So therefore, previously whatever was the revenue of Tamil Nadu, now it was eaten away by central government and Karnataka. Is there a loss to Tamil Nadu? Yes or no? There is a loss to Tamil Nadu, and to compensate that particular loss, so state governments asked to central government that somehow you need to compensate us this loss, because previously we were earning this money. But now it is 50% going to central government, remaining 50% is going to the consuming state, that is Karnataka. Then what is it we are getting? For which central government said, don't worry, we will compensate you. We will compensate you for the loss suffered, don't worry. But that loss, what central government is doing? Not paying out of its pocket. In turn, it is collecting from the people only, called as GST compensation cess. Is it clear here? What is the name of the tax? GST compensation cess. This GST compensation cess is levied on notified goods. Who is levying this? Central government. What is the purpose of this? What is the purpose of this? To compensate the states. For what reason they need to compensate the states? On account of implementation of GST. Are you understanding? GST compensations is levied on all goods or notified goods? Notified goods. What are those notified goods? No need to remember. Not for exam. Got it? No need to remember. Not for exam. There are some notified goods. And who will be levying it? Central government. On what? Notified goods. Okay. Why they are levying? To compensate the states. Why they need to compensate the states? On account of implementation of GST. Up to what date they will levy this compensation cess? Up to 31st March 2026. Got it? So far the date has been extended, and that is up to 31st March 2026 is what you need to remember. Understood? For MCQ purposes, etc. In exam, what should we do, sir? If you see GST compensation cess rate in the question, then you take in the computation, otherwise don't take in the computation. Got it? Mostly it will not be tested, but on a safer side I am telling you. If you see GST compensation cess rate in the question, you take that, and you need to arrive at the compensation cess payable. Rate and all they will give in the question itself. You don't have to remember any rate. Only then you need to take. But mostly here they will be giving this date for MCQ purpose up to 31st March 2026. Then, and whatever compensations is collected, what they will do? What central government will do? Compensate to states. All states or only to some states? Only to some states which has suffered the loss. What is the difference between tax and cess? Because in income tax also we have income tax and health and education cess. What is the difference between tax and cess? Okay, cess is on tax. Okay, but tax is on value. Correct? Not necessary. Cess, income tax alone, cess is on tax. But in GST, compensation cess is payable on value, right there. Compensation cess payable on value, payable on value, excluding GST, payable on value excluding GST. Okay, payable on value excluding GST. So, therefore, if you take 10 lakhs as the value, if you take 10 lakhs as the value, GST rate 28% and 22% as compensation cess, then in that case 28% is also computed on 10 lakhs, 22% is also computed on 10 lakhs. Are you understanding? Which means that is not the difference. Then what is the difference? Remember today, cess, CESS, cess is for a specific purpose. The moment it is collected for that purpose, it should be used only for that purpose. Compensation cess can be used to lay down the roads and buildings. It can be used only for paying compensation to states. Health and education cess collected under income tax, can it be used for the purpose of any other payments? No, only for health and education. But tax is not like that. Tax can be used for any purpose, any purpose. Even tax can be used for the purpose of giving 1000 rupees during Pongal or 2000 rupees during Diwali, or for the purpose of construction of statues or buildings, anything, anything. They can use it for any purpose. Is it clear or not? So, tax is for any purpose, but cess should be used only for that particular purpose. Is it clear? Now, if you see here, this is a classic example. 10 lakhs is the price of a car. Usually today if you see lot of cars are in the range of 10 lakhs. All SUVs etc. and all, they will say X showroom price 10 lakhs, X showroom price 9 lakh 90 like that. And what we will think, okay, let's go and buy 10 lakhs and all is easy, we can buy like that, we will go. Because Mahindra Thar rocks like that one car is there, you know that, and its X showroom price is 10 lakhs only. Means 10 lakhs means everyone can buy na, but GST 28% means 2 lakh 80. Compensation says 22% means 2 lakh 20. 28 plus 22, 5 lakhs. Literally 5 lakhs we are paying GST. You understood or not? For 10 lakhs car, GST itself is 5 lakhs. Huh? On the top of that, we have to pay road tax, registration charges, insurance, okay, all these things will come to somewhere like 4 lakhs extra. Means 19 lakhs we need to pay. 10 lakhs car, 19 lakhs we are paying. You understood? And whenever you buy Mahindra Thar car, we are getting Alto car free. Seriously, yeah? See, Alto car rate it is. 5 lakhs is the rate of Alto car which you are getting free. But where is that Alto car, sir? Inside Mahindra Thar car. You can see that. You understood? So, this much they are levying as compensation cess. So, you thought no, compensation cess means what? 2%, 4% like your health and education cess. No, 22%. And you won't believe, on tobacco and tobacco products, compensation cess is 160%. 160%. Sir, price of a cigarette 2 rupees, sir. But the compensation cess we need to pay will be 4 rupees, sir, on the top of that. You understood? So, on tobacco and tobacco products, they are levying that much. On pan masala, etc. and all, 160% is the compensation cess they are collecting. Okay. Then, even then they will say that, you know, we don't have money. I don't know what is happening to all those monies. Fine. See this illustration. So, which is in the next page. What's the page number? 3. Page number 3. Location of supplier Tamil Nadu. Place of supply also Tamil Nadu. What's the nature of supply? Intra-state. So, type of GST. CGST. Which SGST? Tamil Nadu SGST. Location of supplier Tamil Nadu. Place of supply Karnataka. Supply. Nature of supply. Interstate. Type of GST. Who will collect? Central government will collect. And in turn they will be transferring 50% to Karnataka. Very good. Location of supplier Jammu and Kashmir. Place of supply Ladakh. Intra or inter? One union territory to another union territory. Inter. Type of GST? IGST. Good. And will they share 50%? Why? Because Ladakh is under whose control? So that's why there is no sharing, fully retained by central government. Are you understanding this? Say this, 100% to central government. Understood? So remember, be careful. Just like that, don't write always 50% to consuming state. If the place of supply is a union territory without state legislature, so 100% will be retained by central government. Next. Location of supplier Ladakh, place of supply Jammu and Kashmir. Nature of supply? Interstate. And what is the type of GST? IGST. Will there be sharing? Yes, because Jammu and Kashmir is a union territory with state legislature treated like a state. That's why 50% sharing will arise. Is that clear? Next, location of supply Ladakh, place of supply Ladakh. Nature of supply? Intra-state. And what is the type of GST? CGST? Very good, UT-GST, because Ladakh is a union territory without state legislature, so the type of GST will be UT-GST. And location of supplier Jammu and Kashmir, place of supply Jammu and Kashmir. So nature of supply? Intra-state. And the type of GST? CGST? SGST. Why SGST Jammu and Kashmir? Yes, Jammu and Kashmir is a union territory with state legislature. And next, location of supply Tamil Nadu, place of supply Puducherry. Nature of supply? Inter. Geographically, even though Puducherry is inside Tamil Nadu, but it is not intra, it is inter. And type of GST? IGST. Will there be 50% sharing? Yes, because Puducherry is a union territory with state legislature. That's why 50% will be shared with union territory of Puducherry. You understood? Then you can see here what are those. State of Jammu and Kashmir is divided into 2 union territories. Union territory of Ladakh, union territory without state legislature where UT-GST Act is applicable, and union territory of Jammu and Kashmir, union territory with state legislature where SGST Act is applicable. This I told you. And union territory of Dadra, Nagar Haveli and Daman Diu got merged into a single union territory. Clear? Then see the next page. GST network, and before that you need to make note of what are all the union territories with state legislature and without state legislature. For your information, kindly write down that here. So what are the union territories with state legislature? UTs with state legislature. UTs with state legislature. What are they? Only 3. Okay, Pondicherry. Next. Number 2, Delhi. Number 3, Jammu and Kashmir. Then union territories without state legislature. Union territory without state legislature, write down that list. I gave lot of some space for notes in every page. That is because you read this, and apart from that, while solving questions, you may get some important points, highlighted points, etc. and all that also you can make note. So this book only you are carrying to the exam, not inside exam hall, outside exam hall. You understood? Don't carry inside exam hall. Left, right, center, my photo only printed there. And suppose, anything happens, already I have enough of enemies, and thereafter it will further increase. So please don't take inside the exam hall, outside the exam hall till that point of time. And thereafter, inside exam hall if they permit, but otherwise don't take, okay. But make use of this, because when it is crisp na, this end of the day, where students are failing, they are not able to revise in that one day before the exam. With that objective only I made it. You understood? Why I made it like this is that in a compact form, exam 1.5 days before exam you should be able to revise. Otherwise, because already you have DT also to revise. DD is also there, IDT is also there. Anything that you learn, what's the point in going to the exam, and if you are forgetting it, then you will become like Karna in Mahabharata. You understood? Karna also learned everything, but went to the battlefield, but he forgot. Otherwise, the story would have been different. You understood or not? So this is also same story only, wherein this many months, this much of efforts, every Tom, Dick and Harry will be telling everything to you. You will listen, including me, and thereafter you go to the exam. But thereafter in exam, if you forget things, then what's the point in learning? So that's the reason. So any extra points, etc., try to incorporate in that book itself. Even if that is not sufficient, you buy a sticky note and you write that extra points and paste it in the respective pages, because the success in CA exam is about to what extent you have revised and how many times you have revised. These two aspects only play a key role. So that is what I have observed in many days. So that's why I also changed my strategy, wherein it's not about how much we are learning, but how many times we are able to revise it and how effectively we are revising and remembering. Got it? Then, so union territories with state legislature, write down the list. Number 1, Dadra, Nagar Haveli, Daman, Diu. Dadra, Nagar Haveli, Daman, Diu. Then Ladakh. Next, Andaman and Nicobar, Lakshadweep, Chandigarh. Lakshadweep, Chandigarh. These are the 5 union territories without state legislature. Finish writing that? There are many seats before, now why you want to sit in the last only? Now many students over there. You are comfortable, everyone? There? Super, fine. If you are comfortable, okay, no issue. If you are not comfortable, you can come and sit. So at least in life we need to come forward. No, that's why I am saying. Then you have a fear, okay, if we sit in the front, he will ask questions, etc. and all. Waste. I am not of that time, okay. I will not ask. And say this. And even what I feel is that AC, it's a AC hall. AC is there, no, working. At least sit in the class and sleep, it's okay for me. You understood? Maybe 5 minutes you will sleep. Thereafter you will wake up and you will listen, no? You understood? Even in this chair you are able to sleep means hats off to you. Hats off to you. You are of a different breed, okay? In this chair also you are able to sleep means, okay? Then say this. GST network. What is this GST network? That is, listen, one of the basic feature that distinguishes GST from earlier indirect tax is that in GST everything is automated. So previously lot of documentation was there. We need to submit one form, multiple forms and all, manually we need to go to the bank, we need to fill in the challan and we need to make the payment. Everything is now automated, computerized. For that purpose, there is a need of very good sophisticated network. A system should be in place, that is this GST network. So basically they provide IT infrastructure, information technology infrastructure for implementation of GST. So underline that, it provides information technology infrastructure. It provides information technology infrastructure. There are some keywords which you need to write in the exam, because valuation what they are doing is that, so the valuer will see the key, will have the answer sheet. Every answer sheet is now scanned only. There is no physical answer sheet which is going, scanned copy. In that scanned copy, too much time they cannot read everything. What they will do, so these highlighted words and all like that they will rush through. If those words are there, they are giving marks and we will get. So mainly for theory type questions or while writing the explanations and all, ensure that these highlighted words are being presented in the answer sheet. Okay, if possible, write those highlighted words and underline also. Got it? So information technology infrastructure for implementation of GST, and it is referred to as common portal and provides services. To whom it will provide services? Taxpayer, government, banks and other stakeholders. Other stakeholders means all others who are involved in GST. Got it? So it is like a single point contact. So on one side taxpayer, another side government, at another side bank, and other side other people like officers, etc. Connecting everyone, they will be facilitating the information technology network, that is called as GST network. And what are the activities that can be done through GST network? First of all, in GST what we need to do? We need to register. Before filing return we need to register. So first registration. After registration, we will file returns and pay taxes. That will also be through portal. You got it? So registration, then payment of tax, furnishing of returns. Then just now I told you IGST. What will happen to IGST? Fully retained by central government? No. It will be settled between states. So that also work done by GST network. So this IGST settlement we will not do. I mean 50% going to consuming state, etc. I told you now, this discussion and all will not be done by taxpayer. It will be done by GST network. Then e-way bill generation. What is e-way bill? Electronic way bill. It is a document which is uploaded by the taxpayer whenever they are causing movement of goods. That is, previously, let me give you a little bit background about e-way bill, concentrate. Previously we had check post system. In check post system, what they used to do, whenever a lorry is going through the check post, in the check post there used to be commercial tax officers. I am talking about VAT that time. Okay, these commercial tax officers will ask for the bill and the lorry driver will submit the bills, and these bills, one copy of the bill they will stamp and keep it, another copy of the bills they will be giving it to the lorry driver. And that particular taxpayer, if he is not paying tax in future, using these bills, the department will recover the value added tax, VAT, from the taxpayer. That was the system previously, a kind of check wherein if at all you are not paying tax, I have the evidence that you transported the goods, using that I will recover the tax from you. That was the system before, check post system, physical check post system. What happened? That physical check post system did not turn to be effective. Lorry will go and there will be one person in the check post, we will give one bottle, one packet, check post will be opened and we will go. You understood? Government was not getting anything, but the people who are working in check post became rich and they started constructing buildings, etc. Government did not understand, what is happening? We are not getting money and everyone is transporting goods, and people who are working in check post, every officer is coming and asking, sir, please put my posting to check post, sir, like that. Usually they will not ask like this. Why are they asking? They did not understand. Like a Pushpa movie only it was. You understood? And thereafter, government felt this is not working. It's waste. Let's remove the physical check post. They removed the physical check post, and moreover, because of the physical check post, lot of genuine taxpayers were getting affected, because they will go and they have to pay bribe, because these people are accustomed to bribe. We need to pay bribe. Suppose if you are not paying bribe, they will ask for a number of documents and they'll say, okay, you wait, etc. and all. You understood? It is like, whenever a traffic police stops you, when you have all the documents, so he will make you wait for some time. And those who don't have any documents, he will happily pay 500 rupees and he will go. You understood the difference? Same difference, wherein those who are paying bribe will happily go. Those who are not paying bribe, they used to stay there for 1 day, 2 days, etc. and all in the name of checking. And that's why they removed the physical check post. Then also this problem is continuing, tax evasion problem is continuing. That's where they converted to virtual check post, wherein everyone who is transporting goods from one location to another location should upload the details of the goods and upload the details of the vehicle in which you are transporting as a e-way bill, and you need to inform it to the department. Now department anywhere can stop. Anywhere they can stop the vehicle and they will ask for the documents. And suppose if the person is not having documents, the goods will be seized. Is it clear? And because of that reason, everyone will be reporting the details in e-way bill. That is the concept of e-way bill. It is like, previously and all we know where the traffic police will be standing. And exactly we take the other route, so a divider will be there, left side they will be standing, so towards the divider side we will go, so that the police will not stop like that, correct? Now they changed, same place they will not be standing, different streets, turnings, etc. and all they will be. Some people started standing in the next to divider side also, because everyone will come this side, so they started standing on that side also. So like that, anywhere they can stop. So what if the vehicle is not stopped? Many movies we see in a chasing sequence, like that. So they will go and they will stop. And like that, so roving squad, GST officers are called as roving squad. So various highways and all, if you go to Chennai highways and all, you will see lot of, Innovas, Crista, and then this Tata Safaris and even Scorpios, etc. and all, where they have been given luxury SUVs. Go and chase and stop the vehicles and ensure that you are seizing those goods, etc. and all. And what is the penalty? This is a general information. Once the goods are seized, 200% of tax we need to pay as penalty to release the goods. So that's why, as a penalty is huge, almost everyone are now complying with the e-way bill provision. That is this e-way bill and generating reports to central government and state government. Okay. So these are the various activities of GST network. This also marked as important for short note, either GST Council or GST network. They can ask this as an important short note question. Already they asked this multiple times. Then constitutional provision, say this, 7th schedule to the constitution. So we have union list, state list, like that. And union list means what? Where power to levy tax is on the central government. State list means what? Where power to levy tax is on the state government. But now GST will come under both the list. Why both the list? Because both are levying. And Article 265 says tax shall be levied and collected only by an authority of law. So if there is no power to collect tax, they should not levy. For example, some of you are wearing spectacles. Can government come out with, okay, from today we are levying spectacle tax, like that? Can they levy? No, they cannot levy. Or bald tax, like that. So can they levy? No, they cannot. Like that, power is not there. You understood? Just like that, if they think of something to levy, they cannot levy. Power should be there from the constitution. Then Article 245, power for enacting laws is conferred on parliament and state legislature. Who will make law? Not government. Not government, be careful. Government will not make law. The law is made by the parliament. Okay. and the law is made by the state legislature, that is assembly, where both ruling party MPs, opposition MPs will be there, and in state assembly both ruling party MLAs and opposition MLAs will be there. Law will be made only by parliament and state legislature, that is this article 245. Article 265, because all these in MCQs they can ask, okay. Article 265 governs the subject matter of laws made by parliament and state legislature. So whatever law that is made by parliament and state legislature, so that powers should be as per article 265, that is this. So these are the two articles that you need to remember, article 265 and article 245. Then just know the difference that is efficient. Article 245 is what? Power to make law is with the parliament and state legislature. Article 265 says that power should be derived from the constitution. If they don't have power as per constitution, they cannot make any law. Got it? Then goods which are outside the ambit of GST. What are the goods which are outside the ambit of GST? So far what we have seen is that how GST is formed. Now we are understanding the goods which are outside the ambit of GST. Alcoholic liquor for human consumption, that was there before also, now also, and two more things they have added: denatured extra neutral alcohol and rectified spirit used in manufacture of alcohol. It is a September 25 amendment, not applicable for May 25 exams. Okay. If you see the beginning of this book, I have given all the amendments which are applicable for May 25, index of amendments like that you can see. This time total there are 41 amendments. Total there are 41 amendments, and with respective pages I have given, so as to which place amendments are there. All these are for May 25 exam, and wherever you can see I just followed a coloring pattern also. Green color, wherever you see in that green color, and this M25 like that, I have highlighted those amendments. Whereas some amendments which are applicable for September 25 exam also I have separated and given. It does not mean that you will fail in May and then you will write in September. That is not the intention. Some students may write even for September also, na. For that reason I have given this, okay. And these are the amendments which are there for September 25. And very few only as of now. If there is anything extra, I will be adding it later. And now we need to understand this particular point which we are discussing is not amendment for May 25 exam. How many of you are appearing for September 25 here? Okay, fine. And rest of you all for May 25, correct? Listen, suppose if you get in exam denatured extra neutral alcohol, denatured extra neutral alcohol, what will you write? Chargeable to GST or not chargeable to GST? Not chargeable to GST. Not chargeable to GST. That is for September 25 exam. For May 25 exam, chargeable to GST. That's why I am discussing this amendment with you. You understood? Even though this amendment is not applicable for you, but if it comes in exam, what you should write, you should know, na? Got it? So concentrate. There are only two non-taxable supplies which are outside the ambit of GST. What are they? Alcoholic liquor for human consumption and petroleum products. What are those petroleum products? Total 5 petroleum products are there. What are they? Crude oil, high speed diesel, petrol, aviation turbine fuel and natural gas. These are the 5 petroleum products which are outside the ambit of GST: crude oil, high speed diesel, petrol, aviation turbine fuel, natural gas. Only high speed diesel is excluded. What about light diesel oil? Light diesel oil, is it covered under GST? Yes, light diesel oil is covered under GST. What about kerosene oil? Covered under GST or excluded from GST? Covered under GST, because in this list kerosene oil is not there. What about LPG, liquefied petroleum gas? Covered under GST or not covered under GST? Covered under GST. Natural gas is different from LPG. LPG is covered under GST. Natural gas is the CNG. Usually for autos, vehicles and all, they fill the gas, na? That is CNG. That is only excluded. Got it? Next. Crude oil means you know. raw material, crude oil. Then aviation turbine fuel is used in the flights, okay, flights, helicopters, etc. So these are the petroleum products which are covered under GST or excluded from GST, excluded from GST. Also, alcoholic liquor for human consumption is also excluded from GST for May 25 exams. What is that? Alcoholic liquor, all types of alcohol is excluded. Beer, rum, then whiskey, brandy, gin, etc. Everything, every kind of alcoholic liquor is excluded. Now, be careful. There are two liquor products. They are not finished product, but raw material to make liquor. That is rectified spirit, denatured extra neutral alcohol. Please listen. Rectified spirit and denatured extra neutral alcohol. These are the raw material for the liquor industry. Using that raw material, they make the liquor and they sell it. Finished product, whiskey, brandy, etc. what we see is finished product. But the raw material is this, denatured extra neutral alcohol and rectified spirit. Lot of people buy this raw material and they start cooking the liquor. You understood? That's where they don't know how to make it properly and it will fail, and after consuming it, people will die. You understood? Thereafter, politicians has to go and meet them to tell, okay, don't worry, we are there for you, etc. and all. So that is what I am talking about. You understood here? So this is something usually in Tamil Nadu which already happened very recently also. So this is raw material. What is the treatment of this raw material for May 25 exam? If you get this, what you should write? Chargeable to GST. It is not excluded from GST. What they did is that as our finished product is excluded from GST, so raw material also they excluded from GST. That's why for September 25 exam they added that point. Okay, but those who are writing for May 25 covered under GST. So right there for May 25 exam it is covered under GST. For May 25 exam covered under GST. Covered under GST. These two, that is denatured extra neutral alcohol and rectified spirit used in manufacture of alcohol. Then what about opium and narcotic drugs? There are opium and narcotic drugs which are covered under GST or not covered under GST, very much covered under GST. Opium and narcotic drugs are not alcoholic liquor, that's a different product. So whether it is covered under GST, yes, it is covered under GST, but we have even state excise duty also. See the third point, opium and narcotic drugs are subject to state excise duty and GST. Highlight that, and GST. And GST. Then there is one special point. Tobacco is subject to both central excise duty and GST. So we have GST also as well as old indirect taxes, that is central excise duty. Generally, when GST is coming, old indirect tax should not be there now. But this is an exception where old indirect tax also applicable, GST also applicable. State excise duty, CST and VAT is payable on alcoholic liquor referred above. And central excise duty, CST and VAT is payable on petroleum products referred above. Now tell me, on alcoholic liquor for human consumption, at present, that is today, what are the taxes that we need to pay? State excise duty, then central sales tax and value added tax. So whenever manufacture happens, they need to pay state excise duty. Sale happens, they need to pay CST VAT. If it is interstate sale, CST. If it is intra-state sale, value added tax. Is it clear? Next. On petroleum products, what are the taxes that is applicable at present? Central excise duty, then sales tax and VAT. Manufacture, refineries, they need to pay central excise duty, and upon sale CST or VAT. If it is interstate sale, CST. If it is intra-state sale, VAT will be payable. But for tobacco products, there is a speciality. What is that? GST also applicable and old indirect tax. What is that old indirect tax? Central excise duty is applicable. One more point also remember, opium and narcotic drugs. GST is applicable, as well as state excise duty is applicable. Is it clear? So on this they can make some MCQs. Then we have the concept of input tax credits and advantages. We'll complete this and take a break. Is it okay? So today we started little late na, that's why. So we will take break somewhere like 11:40 like that, we'll take break, okay. So say this, input tax credit. Input tax credit means what? Already I told you, tax paid on inward supplies. What is input tax credit? Tax paid on inward supplies. That is, I am making some purchase, I am a registered person, I am making some inward supplies. When I am making some inward supplies, I will pay value plus GST. This GST paid on inward supply is known as input tax. Same way, I am making some outward supplies. Inward supplies means purchases, outward supplies means sales. So when I am making some inward supplies on purchases, say for example I purchase for 10 lakhs. On the 10 lakhs, GST will be 12%, which means 10 lakhs into 12%, 1,20,000 I paid on purchase, okay. And that 1,20,000 which I paid on purchase is known as input tax. Again, I am making some outward supplies, that is sales. Say for example, I am selling for 15 lakhs. On 15 lakhs, I am paying a GST of 1,80,000. So that 1,80,000 what I need to pay on sales is known as output tax. Understood or not? So I am making some inward supplies and on which I need to pay GST. Please write down 10 lakhs plus 1,20,000. 10 lakhs plus 1,20,000. This 1,20,000 is known as what? Input tax. 1,20,000 is known as input tax. That is GST paid on purchase. Input tax or input tax credit, both are same. Okay. What we will do with this credit? What we will do with this credit? On outward supply, we have a liability. Say the liability is 15 lakhs. The liability is 15 lakhs plus GST 1,80,000. So this 1,80,000 GST on sales is known as output tax. Got it? Now I have an input tax 1,20,000 which I can adjust against the output tax 1,80,000. So what will be the net GST payable? 60,000. Is it clear here? 1,80,000 minus 1,20,000. I will set off here. 1,80,000 minus 1,20,000. 60,000 rupees will be taken as the net GST payable. Understood? Now what is the entry for this? What is the purchase entry? Can you tell me the purchase entry? Purchase account debit? 10 lakhs or 1,20,000? 10 lakhs. Why 1,20,000 we should not add it to purchase? Because 1,20,000 is recoverable, receivable. It is like an asset, current asset. As it is like an asset. Asset shows what balance? Debit balance. So what is it we need to do? Purchase account debit 10 lakhs. ITC account debit 1,20,000, okay, to creditor, okay, we are purchasing now, or to supplier. Understood? To supplier. So to supplier, if it is cash sales or cash purchases, to bank. Suppose if it is credit purchases, to creditor or to supplier, etc., that will be 1,20,000. You understood? Now the moment you pass this entry, you recognize the asset. What is the name of the asset? Input tax credit. It's an asset. It shows what balance? Debit balance. Now on the other side, this side, if you see the sales, what is the entry for the sales? Suppose if it is debit, like credit sales, debtor account debit. Debtor account debit or recipient account debit. So recipient account debit, how much? 1,80,000. Okay, debtor account debit or recipient account debit 16,80,000. To sales. To sales 15 lakhs. To GST payable, means we created a liability here, GST payable. So GST payable liability shows what balance? Credit balance. So 1,80,000 is showing the credit balance, liability. Now asset is showing a debit balance 1,20,000 and liability is showing a credit balance 1,80,000. Now you need to set off these two. So liability you need to cancel. So what you will do? Debit. So GST payable account debit. Okay. Now to this ITC you need to set off. So to ITC, the difference is there. What is the difference? 60,000, that is to bank. Is it clear? So basically what happens is that this 1,80,000 I am collecting from my customer. Out of that 1,80,000, 1,20,000 already what I paid at the time of purchase, I recover. So what is the balance left with me? Carefully listen. I got 1,80,000 from my customer. In that 1,20,000 already paid at the time of purchase, I recovered. What is the leftover balance with me? 60,000. That 60,000 I paid to the government. You understood or not? So this is about the concept of input tax credit. Okay. If input tax credit is not available, what will happen to the purchase entry? Purchase account debit will be 11,20,000, which means 1,20,000 cannot be taken as ITC. So it will be added to our purchases cost. If ITC available, our purchase cost will come down. If ITC not available, our purchase cost will increase. These are all the basic aspects of input tax credit. Keep that in mind. So whenever we discuss a separate chapter on input tax credit, there this information will be useful. Got it? Now say this. What is input tax credit? GST paid on inward supply. So on inward supply, GST paid, that is 1,20,000, can be availed as input tax credit. What is the meaning of availed? Availed means taking credit. Taking credit is known as availed as credit. These are all some legal terms. Ensure that you are reproducing the same term. Don't use the word, taken ITC, set off ITC, like that don't use. Availed ITC. Availed ITC means taking credit. Utilized. Utilized means what? Set off against our liability. So you need to use the word utilized. Availed as input tax credit and utilized. For what purpose it is utilized? Utilized for payment of GST on outward supplies. Okay. So this is an advantage in GST, as continuous chain of credits eliminates cascading effect of tax. Now carefully listen. If this 1,20,000 not available as ITC, what we would have added? What we would have done? We would have added it to the cost of purchase, correct? When we added it to the cost of purchase, thereafter it will come into sales also. Means when it comes into the sales, on this 1,20,000, again on sales also we are paying GST. Agreed or not? I am purchasing 1,00,000, and if 1,20,000 ITC not available, it will be added to the purchase. On the top of that, I will add my profit. So the sales will not be 15 lakhs, the sales will be 16,20,000. When sales is 16,20,000, on that GST if I multiply, definitely the GST will not be 1,80,000, the GST will be more than 1,80,000. Means there is a tax on tax, yes or no? That is known as cascading effect of tax. What is the meaning of cascading effect of tax? You just write down there. Cascading effect of tax means tax on tax. Tax on tax. Tax on tax is known as cascading effect of tax. What is the benefit of input tax credit? Come on, it eliminates cascading effect of tax. So there are three legal terms which we need to know. Availed ITC means what? Taking input tax credit. Utilized ITC means what? Adjusted or set off against a liability. And it eliminates cascading effect of tax. What is the meaning of cascading effect of tax? It avoids tax on tax. You understood this basics of ITC? Now see those words in the next page. Availment of ITC. What is the meaning of availment of ITC? Taking credit. Where we will take credit? GSTR 3B. GSTR 3B is a return which will be filed by every registered person, and that GSTR 3B contains the details of my liability, my input tax credit, everything will be there in the 3B return. So in that 3B, I will enter how much input tax credit I am eligible for. That is known as availment of ITC. Is it clear? So as soon as we see the GSTR 3B, okay. So see this, in returns, this is how the GSTR 3B will appear like. In this GSTR 3B, table 4 is eligible ITC. In this table 4 eligible ITC, first we will add the credit. Whatever credit that we have taken here will be called as ITC avail. For number we are putting here, that number what we add and click on confirm, that is known as ITC avail. Is it clear? Okay, ITC avail. Thereafter, what we will do, this credit taken should be adjusted against our liability. Liability also we will report, and finally we will proceed to payment of tax. You can see here, so for payment of tax. So once we added the liability, so we added liability and we have the ITC also here. So that liability we will set off with this ITC, proceed to payment. Once you click on proceed to payment, the ITC gets set off with the liability that is known as ITC utilized. Is it clear? So, we have understood two terms, availment of ITC, utilization of ITC. Both this availment of ITC and utilization of ITC happens in which place? GSTR 3B. Availment of ITC is taking credit. Utilization of ITC is set off of credit against the GST payable. And there might be excess credit possible. Excess credit. When there will be excess credit, I have lot of purchases but less sales. 1 lakh units I purchased, only 10,000 units I sold. So which means my liability is small but I have huge input tax credit. So I have an excess credit. What I can do with that excess credit? I can carry forward. How many years I can carry forward? No limit. No limit. It's not like set off and carry forward of losses in income tax, wherein there is a restriction like 8 years it can be carried forward or 4 years it can be carried forward. But in income tax you have unabsorbed depreciation and that can be carried forward for any number of years like that. So input tax credit also can be carried for any number of years. There is no time limit, there is no death to input tax credit. But if you close down your business, input tax credit will die. Is it clear? Until that point of time. What if you sell the business? ITC also gets transferred. But if you shut down the business, ITC is gone. So excess ITC can be availed as input tax credit and utilized for payment of GST liability. No time limit for carry forward of ITC. And what if there is a shortfall? Shortfall will happen? Yes, definitely shortfall may happen, wherein I purchased and I sold everything. Whatever I purchased, I sold everything. Definitely my sales will be more than purchases, I will make profit. So which means the liability what I need to pay on sales is more than the liability what I have already paid on purchase. That is this case. So in this case, what is the GST payable on sales? 1,80,000. What is the GST paid on purchase? 1,20,000. So my liability is more than my input tax credit. So the difference amount I have to pay, that you can see here. That is shortfall in ITC, that is output tax greater than input tax shall be payable. So, by registered person to government. Shall be payable by registered person to government. Got it? Next. What are the various benefits of GST? This can be asked as a short note question again. And you remember this mnemonic. Cities cameo. Cities cameo. Okay. Nowadays cameo is normal, na? Every movie. So why, when it will become a pan-India movie? Simple. One movie where actors from all other industries will come and do a cameo, then it will become a pan-India movie. You understood or not? Jailer, Jailer 2, etc. Like that. So remember, cities cameo. Cities cameo. What is it? Cities. C for credit system. Correct? We have input tax credit in GST. Because of this credit system, what happens? Just now you read one word. It eliminates cascading effect of tax. Like this and all, don't write. Like this, cities cameo, C for what, I for what, like that. 1 mark also you will not get. Mnemonics you should not write in the answer sheet. Write in the question paper in pencil. So you know which means what. You write it like points. Point number 1, point number 2, point number 3. And that's how. Mnemonic, that cities cameo like that and all, don't write anything. If you write that, that is considered as an invalid answer. So they will not give marks. Got it? Just like points. Point number 1, point number 2, point number 3, like that you write. Credit system which eliminates cascading effect of tax. I. Because of GST, what happened in the country? Investments have increased. That's true. Because if you observe, before GST, after GST, before 2017 and after 2017, complete change has happened. So lot of companies started coming to India and they started investing and they started manufacturing, because in GST the main advantage is about, so on all purchases everything will be accounted transaction, because foreign companies don't like, or even big corporates don't like unaccounted transactions. Everyone wanted to comply with the law because they don't want black money, etc. So investments have increased and tax compliance simplified. This is humbug. I will not agree with this. It has increased actually, but in study material they gave it as advantage, so we need to learn. This is not true. Tax compliance and all, where it got simplified, it became so complex. Previous and all, it was just yearly one return if you file, that is sufficient. Now monthly 2 returns we need to file. Input tax credit, thereafter annual return, a number of compliances we have. Okay, simplified. Next, employment has increased. This is also doubtful only. With the employment in what terms? Absolute terms it is increasing, relative terms it is not. Population is also increasing and the number of roles also increasing, but the problem is whether everyone is getting job. That is what here we need to see. In growth rate in population versus growth rate in employment, that is not in the same trend, okay. But employment in absolute terms, if you see, it is increasing, okay. Where everyone started making reels and going into YouTube, if the employment is there, why will they do all those things, okay. And next, small business owners relaxations. We have composition scheme, means rather than paying GST at the regular rates, they need to pay GST at the reduced rates, and up to 20 lakhs, up to 40 lakhs, a person is not at all required to register and pay GST. These are called as small traders exemption or small business owners relaxations. So what is it you need to remember? Cities. C for credit system which eliminates cascading effect. I, investments increased. Then T, tax compliance reduced. E, employment increased. Then yes, small business owners relaxations, okay, cities. Then cameo, C for certainty in tax administration. I will agree with this statement because what happened previously, one state, if I am having business in 4-5 states, for different states I need to follow different tax treatments because state wise we had VAT law that used to change, but now almost everywhere the compliance will be same. There is no change in that. That is certainty in tax administration. And automated procedures. Yes. So with the advent of GST network, everything becomes automated. We don't have to do anything manually. And Make in India initiative. So this again, okay, we will remember just because G is telling, so we will follow this Make in India initiative. I don't know how GST will lead to Make in India initiative. So fine, Make in India initiative, because they mean to say that foreign companies are coming here and they started manufacturing, but it is not made in India, Make in India. You understood or not? So maybe because of that. Then ease of doing business. Ease of doing business means doing business in India is simple. Okay. Then ease of doing business. Then one nation, one market. All these are lies. So but we are learning it. One nation, one market. How we are one nation, one market? It is not like that. For example, CGST, SGST credit in other state, I cannot take. I go to, like recently I went to Thrissur for the purpose of taking a batch over there. So CA final fast track batch, and I stayed in one hotel. That hotel per day charges is 2000 rupees per day. And I stayed there for 15 days. I took it in ICI. So 15 days one batch I took there. 15 into 2, 30,000 rupees is the hotel bill. And on that 9% CGST, 9% SGST. Even if I go there for business work, business purpose, but this 9% I cannot take ITC. Why I cannot take ITC? Because it is CGST and Kerala SGST. So in Tamil Nadu I cannot take ITC. If I need to take ITC, I need to get registered in Kerala. For the sake of this, I need to get registered in Kerala. You understood or not? This is one nation, one market here. You got it what I am telling. But namesake it is there. So remember this. What is cameo? Like how cameo is of no use, this is also no use. So see, certainty in tax administration. A, automated procedures. M, Make in India. Then E, ease of doing business. Last O, one nation, one market. These are the benefits of GST which you need to keep in mind for exam purpose. If you get a theory question, what are the various benefits of GST, you need to write this. Then you can see here, there are some special category states as per Article 279A of the Constitution. What are those special category states? What is Article 279A of the Constitution? GST Council, very good. They have given some special category states. What are they? Remember this: M, M, T, N, M, M, T, N. Okay. Then A, SAM. These are northeastern states, MMTN, ASAM, MMTN, M for Manipur, Mizoram, Tripura, Nagaland, A, Assam, S, Sikkim, A, Arunachal Pradesh, not Andhra Pradesh, Arunachal Pradesh, okay, and M, Meghalaya, all that. India map you know na, that side, northeast, full that northeast states are MMTN, ASAM, Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh, Meghalaya, MMTN, ASAM, HUJ, H, Himachal Pradesh, U, Uttarakhand, not Uttar Pradesh, Uttarakhand, then J, Jammu and Kashmir. These are considered as special category states, which means always some special privileges are given to those states, okay, because they are economically weak, or they needed a support, more support from the government for that reason. So these are categorized as special category states. Then whether IGST is applicable on import of goods and services, definitely on services IGST is there. On import of goods, generally customs duty we need to pay na, but IGST is also applicable. IGST is applicable on import of goods or services and export of goods or services. So with this we completed the first segment, that is the basic aspects. Mostly in this basic aspects of GST, we will get MCQs or we will be getting some theory questions. I told you which are the theory questions. 3 important theory questions. Number 1, GST network, GST council, and this benefits of GST. Mark this as important for short note, okay.